Hi, and welcome to the Stock Scores Market Minutes for June 5th, 2017. This week I'm going to talk about the importance of doing your scanning every day, then the weekly market analysis, and finally, Trade of the Week on CCIH. All right, profitable stock trades tend to come in clusters. You get these bursts of action where you get lots of good picks and they end up doing well, and then that's followed by often long periods of boredom where there's not a lot of trades to come. The good trades often come after these periods where we're bored and we lose our focus. It's important to stick to your processes, to your routines. Scan the market every day if you are a position or swing trader, or doing that day trading process every day, because the winners will come. If you lose your focus, you could miss the start of the next leg. All right, let's get into the analysis for the week. The S&P had a pretty good week, breaking out of this flag pattern and moving higher, and the upward trend on that 30-day 60-minute chart is intact. We are getting near the top of the channel. We've got a little more room to go yet. It hasn't gone parabolic, so I do think there is a little bit more upside, but of course riskier now than it was a few days ago. On the longer term weekly chart, you can see that we broke that flag there. We stalled under resistance, and now we have broken through that. That should take this market higher, and again, you want to draw out the channel, and you can see we've got a few weeks of upside before we get to the top of that channel and really get into an overbought phase. On the Russell 2000, that market has underperformed the large caps. You don't need me to tell you that. The small caps have been dead money for 6 or 7 months, and we continue to be that way. We did have a little bit of a jump, but still has not broken through to new highs, unlike the larger cap indexes. So what we want to see is this breakout to new highs. I expect it will stall a little bit, and then let's see if it can break out. I am starting to see a few more low price stocks making moves, so that is encouraging. On the Canadian market, we are slightly negative. We've got a little bit of a pennant there. I would call it a bearish pennant, given that we started up here in a building below that trading range. Not really a sick market, but still one where the buyers aren't too enthusiastic. So I think you want to be cautious in the short term with Canadian stocks. There you can see on that longer term chart that we have built a rising bottom and are starting to potentially break down through support. You want to watch on the XIU that we don't break down below 2250 on the weekly chart, because that could lead to more weakness. The next stop would be down around here, 21. It's not a huge move, but still 2.5–3% to the downside is something that can have a difference to your portfolio. On the TSX Venture, falling tops, that's a sign of pessimism. We have been basically cooling off here with the slowdown in the price of gold and the relative sideways trend in oil. Of course, this market heavily weighted in commodity stocks, so not a market I want to trade too enthusiastically. There will be hot stocks, but just be very selective with what you trade on the TSX Venture. On the Treasury bond market, U.S. Treasuries broke through some resistance here. We recently broke the downward trend line. That points to Treasury or bond prices moving higher. That means interest rates lower, and therefore if you're looking to get a mortgage, I'd wait a little bit, because it does look like they could get cheaper. US dollar also suffering as money moving into other markets, primarily into the European market. That has the US dollar weak. That's why bond prices have been going up and yields going down in the US. Really, the reality is that in the European area there, the yields are lower, and the American yields are just coming back to them. People are selling out of the U.S. market, and you can see the U.S. dollar suffering for that. Now, I don't know that we have tremendous downside. We're getting close to the bottom of the channel where it probably bounces up, but there's not really significant support until there. So still more downside, just I think it'll trickle down in that direction. On the gold chart, hey, we're trying to break this downward trend line. I draw this every week. I could probably draw a little better there. And we hit it, we pull back, we've hit it again. Are we going to break through? Watch for a break up through this level right in here. That would be a sign that gold is going to move higher. It doesn't have tremendous upside because it'll get stuck up at the old highs from the summer of 2016. but it is building some optimism here. So I've been a bear on gold for a long time, but I'm starting to notice the improvement in the gold market. On the oil market, hey, falling tops, that's a sign of pessimism. We've got good support down here. We've bounced off of it once, but it does look like we're going to test it again, and would not surprise me if we see oil lower in the months ahead. In the weeks ahead, probably comes back into this range and bounces, but longer term, I am thinking that we could get another breakdown in oil as we go into the summer. On the VIX, hey, we had that spike in volatility that lasted all of 1.5 days. We are back down at the lows, showing that you should never hold these ETFs, ETFs that have time value decay. If the trend is going against you, they are very short-term trading vehicles. I day traded on that day, but I would not want to hold these things when the trend is going against you, because they just lose value day after day. Only hold them if the trade is working. All right, my outlook then, bullish on US and US stocks short and long term, neutral long term on Canadian, bearish short term, neutral long term. We are testing that downward trend line. The short term trend is up, so we are bullish on gold. Oil, neutral long term, but getting a little bit threatened there, bearish short term. Stocks finally saw some upside volatility this week. That was fun. And the US markets broke to new highs. US stocks continue to trickle higher, while the Canadian markets suffer in that sideways trend, primarily due to the ailing commodity prices that the Canadian market is so dependent upon. Gold could break the downward trend, watch for that. Oil could test support, be cautious of that, and fear remains low. All right, trade of the week. This week I want to show you a trade that I day traded, but was also a good swing trade. This is CCIH, and I've got two charts here. This chart on the left is the 13-minute chart, and it shows my 13-minute action candle. That little pink dot there is my action candle indicator, something that you can get if you are one of my active trader students. So on that basis, it was a good swing setup. We had an action candle out of boring sideways trading, spike up in volume. On the day trade today, it was also a day trade yesterday, actually, that being Thursday. I'm recording this on Friday. But on Friday, I bought it right there. It wasn't a huge winner, but it went up about 2.5 RR into the close, kind of trickled higher, but just demonstrating the importance of the abnormal volume, which is what catches my eye. I build my watch list based on abnormal activity. That's what the action candle indicator is based on, and then we have some other indicators for that as well. For more information on that, just go into the Stock Scores Education Center at stockscores.com. Well, that has been the Stock Scores Market Minutes. Please subscribe to the channel, tell your friends. If you like the video, click on that like button. Have a great week in the market and trade well.